SABMiller is the world's second biggest brewer by volume and has a market cap of 619 billion rand. Headquartered in London, it owns more than 200 beer brands in over 75 countries across 6 continents. They are also one of the world's largest bottlers of Coca-Cola products and have a 36% stake in Tsogo. SABMiller trades on a price-to-earnings ratio of 27 and a dividend yield of 1.9%. Are you going to lambaste this one as well?
Now, I'm not quite as anti about boozing as I am about smoking. That you'll be relieved to hear. No, I mean, they've done a similar thing, really. It's actually interesting because it's a similar sort of global plan. What makes me most interested in SAB is their stake in China. They did some spectacularly fantastic deals, particularly the one where they bought into the South American business, Bavaria. But, they've been adding incrementally and adding market share and so on. I wasn't so thrilled about Grolsch and about Foster's. I don't like these deals they do to buy into developed world assets, because those, surely the margins are all finished and squeezed out and there's no juice. But, I mean, they've got a great brand, great management team, so you can't fault it. The only thing which makes me anxious is that 27 price to earnings ratio.
Does that 27 price to earnings ratio also make you anxious, Gary?
Maybe again, not as anxious as Paul. I mean, yeah, if you compare it to someone like Heineken, Heineken's PE obviously a lot lower. But I think that is a high PE, but it's high for a reason. I think. I mean, if you look at their last results, they were struggling a little bit. But I mean, we did see also. You mentioned the investment in the developed world. We saw a big pickup in Europe as well. Even though yes, there was a little bit of a squeeze on the margins there. Overall, I think because it's a good company, because it's got very high barriers to entry, it's the leading player in most of the markets that it operates in. I think it's a good one, and I think that's why it's showing such a high.
And
PE.
you're not anticipating any anti-drinking regulation coming to the fore?
I am, in fact. In many countries, that excise duty. You saw what they did in Botswana. Ian Khama decided no.
People would have a tough time if you were a regulator anyway.
What that does do, unfortunately, often in these countries, is that you have tighter and tighter regulation leads to smuggling and moonshining and so on. Look, the question really is how much upselling can they do? In other words, how do you take someone who sits on a piece of plywood on top of a paint can at a shebeen and turn them into a premium beer consumer in the bottled clear lager market? And around the world, I think there will be a fair amount of that. As I said, the China thing is interesting because Snow is the world's largest beer brand. The only problem is they make no money. No money whatsoever. The whole of the Asia-Pacific region kicks in 6% of EBITDA, and that includes the Foster's business. So it's a long-term thing to see if they can unlock more profit there.
Gary, anything to add before we go hot or not?
No, again, I think, looking at it, I mean, it's a volume story for SAB, and, their volumes are still outperforming its competitors. So for me, hot.
Hot or not, Paul Turan?
I think they could do some restructuring also. They could sell off Tsogo and so on. I'm quite tempted, but value-wise, I'm going to go with not hot.